we're going. I was actually talking to the BM team, try to get some recording space, and he has set up some interviews for us to do out there.
Are you excited to at least be able to stay at the beefsteak this time?
Yeah, we're not gonna leave and go set up chairs.
Right? Like stay up until like 3 a.m, putting chairs in the main expo hall.
Yeah,
Oh my God.
after a few cocktails and a bunch of steak, that's the last thing I want to do.
Yeah, no, definitely not. But ladies and gentlemen, welcome in to the very first episode of Bitcoin, stocks, crypto. Yeah, I said the word weekly chart analysis because I don't feel like calling us weekly technical analysts, nor do I want to call us chart boys. But I am your host, Q, and I'm joined by my co host, Austin. We are a couple of chart boys who, in fact, we should probably take a lesson or two from Odell and humble ourselves. But until that moment comes, we are just going to get right on into the charts. I have my style of things. Austin, you've got your style of things. We'll be going over Bitcoin. We'll be going over general markets, different stocks, and of course, a shit coin of the week. Before we dive in, I want to sort of have this tagline because we are two Bitcoin maximalists who very much have no interest in the broader crypto space. But as traders, as well as long-term investors, I think there's a valuable lesson to be learned from the FTT fiasco, in that like I didn't hear about FTT until all of that contagion really started swelling up. Like once I saw CZ's tweet, then I had to look up what FTT was. But Bitcoin's price went down along with the broader crypto ecosystem because of the FTT fiasco. So if you're a trader, not just if you're a long-term holder, it doesn't matter. Keep doing your thing. Like I commend you. But if you're a degenerate gambler like myself or a full-time trader like Austin, like it behooves you to learn and just be aware of what goes on in the broader crypto ecosystem, because all it takes is one fucking all right, I already used the F word for today's episode. Sorry, Austin. And all it takes is
Okay.
one CZ to just tank your entire portfolio.
Yeah. And it gauges the whole sentiment of the market. Like you got to know what the sentiment is. So I look at broad markets. I look at like everything. So it doesn't mean I'm a believer in it or anything like that. But it'd do a disservice not to know or look at it at all. I think so. You don't have to put money in it. You don't have to believe in the stuff. I don't. But yeah.
Let's get into it then. We're going to start with Bitcoin first, foremost, and always, because that is the apex predator here. Austin, I'm pulling up your chart now. We're on daily right now, correct?
Yeah.
So walk us through, what are you seeing? What are you paying attention to right now as we approach potentially a new short-term high for Bitcoin?
Yeah, I'll actually flip it. So I do a newsletter, and this is kind of why I look at. So I have this indicator that I made or had someone code rather, and that's what this green line is. And it's kind of, I would put it as like it's an algo line. Basically, it's a combination of price and volume. And you can see when it breaks, I mean, it was the bear market, it was red the whole way. Breaks at 18 and we're at almost 30. And then we have one shakeout here at the banking collapse. So these arrows on here, it's kind of how I manage. I again look at more of as risk. So like right now, like the newsletter I put out today was like the risk is to the upside. So everyone's trying to call it top, everyone's calling it euphoric, like in this candle in here, and you can't call the market, right? So you want to have the market tell you when it's showing weakness, and that's when I go down to the 4 hour, and that's why I have this 24K level popped out. So anything above 24, I'm looking as a dip, straight up. So I pair this kind of with the overall markets. So like I look at the dollar as a huge market that no one's really paying attention to. I mean, they do, but I do some analysis on it. And if we break this 103 level, I called this out a couple weeks ago in my newsletter. It's like if we break this 103, that's when Bitcoin really has that upside potential. So that's what I've been looking at. You know, right here at 22, it was up 10% off the lows. I'm saying in the newsletter, I'm like, hey, we just broke into a bullish environment. We go from 22 to 29 almost, like really quick. So yeah, that's how I'm kind of seeing it. I see up only until 24K would be the first sign of any weakness. And that's, I'm not going to give a target and say we can go to 30 or 40 or 50. But until I see 24, I'm saying up only, basically.
So as far as so long as it holds that support at 24K, this looks like it will continue to trend higher, in your
Yeah.
opinion.
Yeah. Yeah, that, and then along with stocks are possibly going on for like how I look at it, S&P 500. We get above this, red dot again. It's all one indicator that I have. I use the same one, and if we get above here, I would say that's bullish environment for stocks. So that'd be risk on sentiment, and then we got dollar breaking down, so weakness in the currency pair, the Bitcoin USD, and we're already ripping, and we have the excitement back in Bitcoin. We have the fundamental, the narrative. We got everything going for us, and we just got beaten up for 2 years. So yeah, I could see more legs to this. I don't think it's necessarily over, just because we're 29. I see a lot of people saying it. It needs to calm down, come back. I'm like, until I see 24, I'm saying we're looking good.
So walk me through a little bit. Let's stay on the Bitcoin side of it, because I know that like everything is sort of connected regardless. But walk me through a little bit of what goes into helping you determine this floor right now of 24K. Like, what is it you're paying attention to?
Yeah, I mean, like I said, honestly, it's that indicator. So you can have whatever reference point, technical analysis. It's all about consistently looking at something and having a reference point, in my opinion. Because like, is this number like a magic number, or like is any one indicator going to be that magic number? No, but knowing how your trading style is or your investment style is around a reference point and being able to execute around it, because these things are not perfect. Like if you go back and look at this last time we were at like a 4 hour in my process, it's kind of like it jumps around a little bit, and like you get a little choppiness. So it's not ever just like as simple as it looks in hindsight. But the 24 is just, that'd be the first sign of weakness of like, all right, this is, again, based on how I'm looking at the first sign of weakness back here when we were running up at the 25, it was this level here, chops around for almost a whole week. We get these close below it, and then I actually called out this drop that we had. This was before the banking crisis stuff came out, before SVB and all that. I'm saying in the newsletter on this arrow date, said watch out, dollar strong, stocks are looking bad, VIX is up, so the global markets are giving you a signal, and then this is breaking down, and then boom, the shoe drops, and then boom, the news hits. So the second leg was the news. The first leg, the market already priced it in before the news came out. So that's kind of how I see it. Again, I don't try to speculate too much on what all these fundamental things mean, simply because you can't ever gauge it. So I always see all the time people saying we're overheated, or I'm going to counter trade Twitter. It's like, okay, well, how do you know if we're at like a level 8 sentiment or like a level 12? Like it's going to be bearish for days. When do you go bullish just because everyone else is bearish? Like there's no like signal. I mean, you can kind of gauge the sentiment, but I don't think there's much of an edge there. You know what I'm saying?
So I want to, like, I get what you're saying. However, I do want to push back a little just on the notion that, we are, in my opinion, at least, we are waiting for the Fed, a group of 12 men and I think 3 women, to make a decision on how they're going to approach the dollar. And as a result, how the rest of the world is going to be able to trade off of that. And everyone's just sort of like stuck waiting for this moment. No rate hike or even a rate cut signals QE, which everything will pump accordingly. We saw that after 2020. So like I know we're trying to not gamble. I know there's a degree though of impact by Fed policy decisions. So how do you weight these things?
So, like I said, I think most of the time it's priced in. Like, I don't know more than the entire collective of the market. I can have my opinions on it, but even if I am right in my opinion and the market thinks something different, then you're going to lose money. So, like, I try not to dive too much into the news flow. It's important to keep up with it on like, what the actual rate hike is, or like what the decision is. But I mean, that could just mean, you wait and watch too. Like, I think people get a little too anxious around these events too. If it really is unknown, then what's the edge in trying to predict it? Like, I think there's enough. If you're patient enough, then let it resolve for even maybe day before, day after. Because I look at futures markets quite a bit, and the whole global market kind of goes low volume, really choppy, back and forth around these events. So again, the edge there is very slim, just because the entire market is kind of unsure, and yeah.
Fair. So let's talk a little bit now just about, why I actually think this 25K range starts to become valid. And do we have, no, that does not want to work with me. I want to talk volume with you. Like, where are the areas that you have been noticing the most volume as it relates back to price? And I'm trying to find that chart where you can see the volume sort of on the right hand column along with the price. And once I do, I will pull that up on the screen.
Yeah, that volume profile. Basically, like I said, that's what this indicator really is, and it's, for me, this level was really big in here, this 22, and between like 21 and 22. When this flipped, we get this huge gap up, and then we ripped 10%, I think, off the lows. So this was the Friday close, and then there's this gap because, again, these SME or these futures, the SME isn't open on the weekends. So when this gaps and opens on that Monday, that Sunday night, we're already 8% off the lows. Goes another up to 14%. Consolidates here for, these are 4-hour bars, so 1, 2, 3, so like 12 hours we sit there, and then we go make another run. So this was really big that we just ran straight to this area, consolidated for 12 hours, and then flipped it, and then we just pushed. And then since then, we've just grinded up. So I think this level here would be really important too. And that, I think, coincides with the daily. It's moving up here with the volume and the new price, but yeah, 22. So 24, 22. I think a lot of people are looking at that. Again, I don't know on the other side of it when it comes back or if it will, but those would be, I would start changing my up only approach if it went below 24. I've been up only kind of since 22.
Let's talk on the other side of this. So you have the upper end of this range with the red line. That's at about 28, which Alex McShane will forever dunk on me that I called the line in the sand that we, under no circumstances, could have given up on the way down, because there was such an insane amount of buying volume at 28 that we are now reapproaching that with so much overhead supply and resistance up above. I know you've already established that, like, once we broke above 24K, like, we are in a bull run. So long as we hold that, we are in a bull run. What impact of a breakout above 28K, like, how would that change your either aggression or approach after a breakout of that level?
Yeah, so 28, I'm really just seeing as like we were up quite a bit. Like I said, I think 78% off the lows. So 28's not the level I'm really looking at that's too important. The band here is a volatility band, so think of it kind of like a Bollinger Band, but I just don't have it coded in, and I use kind of like my own equation on it. So this is basically on any given day. It doesn't have to be one day, but this is kind of the range. The upper echelon is up here. This isn't a TA line that's like, here's some bars and some candles and it's connecting to the left to right. This is on the very right edge of the chart. I'm saying, on this day, this is the oversold. This is kind of the overbought, or reverse that, overbought up here and then oversold down here. That's what these green lines are in my chart. Again, all this stuff is kind of my indicators that I look at, but they're just reference points, right? So you can look at pretty much, any different indicator, and they're all going to be a little bit different, but it's all about how they react off of it. So again, for me, I don't try to call the top. I just think of this as, if it's above this daily and if it's above this 4-hour, then I don't think there will be a top. My kind of what you're referencing, like this 28 level breakout, that was me at 2022. and then we've just climbed from there. So like this 22 was like, okay, now I'm up only. That's why I keep on calling it up only, because I don't see a top until the market actually creates it. So I never call the top, but I won't ever catch the exact top too, because I'm going to wait all the way until you get below 24. So I'm waiting for a whole 14, 15% before I even change my stance. So it's not necessarily that I'm trying to pick that. My look is like, I want to not get caught in this again. I've been through 2 bear markets, and dude, it just absolutely sucks going from 55 to 15. It's like I could have risk managed this a little bit better. And that's kind of what I've been doing with that newsletter too. So it kind of reinforces that. So less getting in, taking profits, that kind of stuff. More or less no leverage, ride the waves. And right now, again, I think we're in a bull wave, which is pretty exciting. So we'll see how long that lasts.
I feel you though, like especially as I think more and more people are really coming around to this notion of the 4-year cycle, and I think it starts to become really important. If you, again, it's not for everyone. Like if you genuinely just want to be the type like I'm just gonna buy, hold, and I'm not gonna think about it, that like my hat goes off to you.
Mm-hmm.
I like personally, I'm not in that financial position where I can just like afford to like, hey, I have all this money over here tied up. I'm going to live on zero cash. Like, no, realistically, I think there's also another side of it that we'll get into. But I think understanding how to do these properly, safely can help you over these 4-year cycles, capitalize on holding on to your gains and then rebuying at appropriate levels. We're not saying you're going to sell at the exact top and you're going to buy at the exact bottom, but imagine you had sold half your stack somewhere between 50 and 35K Bitcoin, and then you repurchased that exact same amount of Satoshis between 25 and 15K. Like you could have lived off of that arbitrage, probably not all that much if you're genuinely trying to buy back all of those sats that you sold, but there are opportunities there. And as this range becomes a lot larger, when we get to the higher values, like 1% change in Bitcoin's price, if it's $1 million Bitcoin, that's $10,000 swing. So there are opportunities.
That's an interesting way to look at it. And like, I mean, 50% is a lot. I understand people not want to part with that, but my whole approach is like, instead of get off 0, I say like get off 100. Like at these prices, I mean, we've been beaten up for 2 years. Yeah, you don't have to buy or sell down here. It's just like stack and you'll be fine. But like people who bought during this last bull cycle, it's like, dude, you've been down money for 2 years. Like we were above 30K back at almost in 2020. Like, and if you would have DCA'd up here, I mean, you're still down money. You're not even up ever on your Bitcoin. If you like ran out of money before you got below, before you got into June of 22, if you DCA'd from January of 21 all the way like 18 months, you would still be down money on Bitcoin like today. So my whole thing is it doesn't have to be a 4-year cycle either. Maybe it's just like these mini cycles like we had before COVID. I mean, here you can see we went from last bear market, we went down from 3 all the way up to 14, then back down to 3 or 4. Like you can have these big waves, and again, you don't want to call tops. Maybe we are in something like this, and we're like, this is like the 28 level that we're seeing. Like this looks pretty similar. Like, we flip it, we push, we grind up only. Everyone thinks 28's the top, right? Kind of like where we're at, and then it does another gap and it just runs. Like, what if we see something like that right now? Like, there's potential of that. It looks pretty similar, right? Like, you could see we could go up to 50 if we get some risk on in these other markets again, and that could have a big decision on that. Could be this Fed, what they're doing and how the market's reading the Fed and stuff like that. So just to tie that all back around, like I say up only until 24. Everything above 24 is a dip.
Touche. Let's talk the dollar. I liked your Dixie chart. Can you pull that back up? Because I think there's a really important lesson to be learned here. And, you kind of alluded to that 103 level.
Mm-hmm.
We've seen, would you be able to do it live overlay Bitcoin price to the Dixie?
Yeah. Let's see if I can compare up here. I can even throw a line chart on so it looks a little bit easier. Throw Bitcoin. And then might just bring it down to another one.
Or instead just get a correlation coefficient, because I wouldn't be surprised if we see some sort of a negative correlation between the two, where as Dixie's price comes down, Bitcoin price tends to appreciate and vice versa.
How do you get the correlation?
I think you just search. This is why I said come do it live with us, guys. Click indicators.
Where?
Top in the search, just look type in correlation coefficient. All right. So negative 7.6. That is that is a significant level of correlation. And the negative essentially shows you that they're negative. So for every dollar increase in the Dixie, Bitcoin is decreasing by 76, roughly.
Yeah. You can see this huge. I mean, where we topped, or the dollar top, that's when we started moving up, right?
Exactly. So I think there's an important lesson here as well that, again, in the same way that I started this episode kind of talking about, you need to be paying attention to crypto at large. You got to be paying attention to the dollar here. And Bitcoin continues to absorb this liquidity from the dollar marketplace. We'll get into the M2 maybe today if we're feeling generous and throwing a lot of things at you guys, but we got other shit we got to cover as well. But between the M2 and the Dixie, I think these are two really important factors that do impact the price of Bitcoin, and you can use them as tools, not necessarily telling you like be hyper vigilant and like check it on the reg. Just have a sense, be aware of where it is and where it's trending, because that can also help impact, oh, hey, these indicators are giving me mixed signals, but I'm getting a confirmation on the Dixie of the direction that, I try to not say things like I think or I hope or shit like that, because once you're in those waters and trading, like you're just gambling. Should also have mentioned this before, in the middle, and after the show, so we'll say it a bunch of times. Don't listen to two fucking idiots on YouTube and just do everything we tell you to do. For the love of fucking God, like do a little bit of homework. Yeah, I'm gonna say that like 6 more times and still figure out a way to get sued. So talk to me a little bit about the Dixie. I've talked a lot about it.
Yeah, I mean, it's just it's the other half of every trade, so people don't really think about it. They don't think about stocks as being like, they just think of the actual stock, but it's actually priced in dollars, right? So like this chart is very important because it's the other half of every single transaction in the global economy. So like when this thing goes on a tear, I'll actually get this off here so it looks a little less confusing. When we go on absolute bull run in the dollar, this just wreaks havoc in everything, right? So like you had you can zoom this out even to months. I mean, how many months? We had a full year of a bull market, and even here we're still like we're above this big zone. This was a whole 5-6 years zone. This big zone in here, this consolidation. We come back, we tap it. Now this is just a giant decision area. Like, is the dollar going to keep moving higher? Or we just had this we were all the way back up from, let me get this back into, went to 115, went down to 100. So we had 15% move. And then now we're just kind of this decision area. And I mean, this is, the whole market is just at kind of a decision point. So again, stocks here, looks like you could have some higher lows. Consolidating, is it going to go up or down? VIX, we got that big spike with all this baking stuff going on, but really you haven't seen anything like you did back in COVID. So this is one of the most tame bear markets ever, and they usually don't end until you get up in the 50s. So you got 2018 had that kind of crash in. That's actually when we first started hiking was back in like 2018, and then they had to stop, and then COVID happened. But you can see here when we get really those like 50 levels is when the bear market ends, and we're all the way down here at 28. So in the VIX, like, it's not signaling there's a bunch of concern. It's not very elevated. So if you get a little bit of a bullish sentiment, you get a good stretch, maybe some good comps on some datas for a fiscal quarter, like that's how you get 50K Bitcoin or so. You get one of these runs that's like we have a brief window because we got beaten up so bad. And then you have one of these moves like here, you go from 3 to 14. Maybe you get that 15 to 40 type move real quick. And then there's no decision area. So that's what I'm kind of seeing is just like risk on might be coming back a little bit. Dollars, losing strength, and stocks are kind of at the decision area. It's been chopping around for quite a while. Looks kind of, it was definitely down. Now it's more flat. See if we can start getting a little bit of an up, get some risk on. And even if not, if we don't even get up in stocks, that's okay too, because it seems like Bitcoin doesn't care as of right now. So that's kind of a new development too that I should probably touch on, is like, this is the first time I've seen this big of a, I know people are saying to decouple, and we've heard this before, blah, blah, but based on what I look at most of the time, this is one of the biggest deviations I've ever seen in Bitcoin. Like, so that's, I don't know if that's just sentiment changing, big time players, allocating, finally getting off zero. I don't know necessarily what is it. It could be that Bitcoin's front running the risk on wave. So I don't know exactly what it is, but there's a giant deviation in traditional assets and Bitcoin, which, is pretty exciting.
Yeah, I mean, I gotta play the skeptic only because I agree. Like I've been chomping at the bits waiting for this moment to decouple. I do think that there is a small contingent of people who have, especially after the Silicon Valley Bank incident, started to look at Bitcoin in a completely different way. I do caveat and say though that it is a small contingent, and if you actually I don't know, go outside, leave your computer, and talk to a normie, like they very much still believe that Bitcoin is dead or a sham, or so. The price is reflective of that, but I caution everyone from getting too exuberant by saying the same people that move the stock market with their large funds are the same people, in my opinion, that are moving the price of Bitcoin. They have long moved it. Not every single private fund needs to disclose that they bought or sold Bitcoin. Only publicly traded funds have to.
Mm-hmm.
And you are seeing a rush to something that is not the dollar more than anything. Gold got bid up over the same course of time as Bitcoin. So I'm not trying to be the bear, but someone needs to, I think, be the adult in the room and tell all you Bitcoiners, like, this is an opportunity to capitalize on, but by no means have we won. We're still like, I'm a basketball guy. What's your sport? I'm gonna put it in your sport terms.
Oh yeah, I'm basketball all the way. I played all 4 years high school.
You know when a team starts on a 10-0 run in the first quarter, the other coach takes a timeout?
Yeah.
We're at that timeout break in the first quarter. That's it.
Yeah.
That's where we are in the competition to overtake the dollar. We're not even the first quarter, it still has double digits in the amount of time left. That's how early we are in this game. So
yeah. I was the decoupling.
I'm not trying to knock on you though, because you're absolutely right. Like everything you said is 100% accurate. Like we have seen a decoupling that we have long waited for, in an opportune moment for Bitcoin to show it was created for this moment. However, I don't think enough normies realize that. I think the smart money has realized it, because that's how it always works. The smart money goes and then the rest of the people follow.
Yeah, definitely. So the decoupling, I mean, it's definitely going to take more than a couple of weeks, but I was saying, gold's up 20% off the lows too, which is a crazy move for gold. 20%. It's a way bigger market, right? I think Bitcoin's like 3 to 5% of the market cap. So that, yeah, the decoupling is I was just saying the deviation really is like pretty staggering, because again, based on like how I look at the market, I don't know if you can, I don't have those pulled up. I either look at it as like up only, do something, or chop, or like bear market, or like down only. So it's weird that it's one of the first times I've seen, based on the indicators I look at, which are just, they're just my indicators. They're not like the holy grail, but it was just interesting. Again, those reference points. I haven't seen stocks be in a bearish environment and Bitcoin be in this much of a bullish environment and held for this long. I mean, this is about the whole first quarter that Bitcoin's been in this environment. So like, doesn't mean it is going to decouple, but it's just really interesting that this is it's just something new, I guess.
Pull up the NASDAQ chart though. Because to your point that risk on is back, I think that the NASDAQ chart would reflect a similar picture as Bitcoin has, with the exception of the last couple of weeks.
Yeah, let's see. Okay,
yeah. So like for me, the gauge to check what is pumping and risk on in the public markets is always the NASDAQ tech heavy index. So it just sort of feeds into that narrative. We haven't seen that second leg up the way we saw with Bitcoin.
Mm-hmm.
I don't like the Russell 2000. Just it's not as important to me. That's just the truth. Like, like the NASDAQ is the risk on, and yes, I'm biased as fuck because I love the ticker symbol QQQ. In fact, if you are listening and you don't have tickets to Miami, use promo code QQQ and get 10% off. I will know if you do, and if you do, we will smoke so much weed in Miami. But like, give me the reason why you would prefer the Russell as a gauge for risk on.
It's just smaller caps, so it's kind of the same logic of like the altcoins. Looking at those, like if people are diving at the riskiest, the smallest, the most speculative, that's just the ultimate sentiment, I think. I think the NASDAQ, again, with being some of these tech companies are just, I mean, safest place in the world. I mean, it's a digital revolution going on. So there's just not a lot of dead weight, whereas like the S&P 500 has like, I think, some dead weight in there, some dead categories, some old companies. So, I mean, there's a whole mixture of things that would be going on there. I just thought it was interesting too, because I haven't looked at a Russell chart in a while, that small caps are kind of
getting decimated
quite a bit too from everything. Usually these are a lot more correlated, but I don't do too much because I really just look at this S&P to the broad index and Bitcoin, dollar, and VIX. But it is interesting to look at how well the NASDAQ has done too.
Yeah, I think, and there's a very, I think, in my opinion, simple way to understand why something like the NASDAQ pumped in 2020 through 2021. A lot of these stocks in the NASDAQ still aren't even profit. Like Tesla only started turning a profit like a couple years ago. Like this is very much like you are taking a chance on technology that you think is going to be viable for future generations. But how do you properly value that? And the actual formula to calculate the present value of future profits relies on the going interest rate of the central banks. So when the central banks have cratered the interest rate to zero or near zero, it makes the future value of money in the present look a lot more lucrative than if, say, you have a 5% risk-free rate. Then all of a sudden, the future value of money is discounted by an additional 5%. And then you extrapolate that over the number of years the investment gets locked up. So I think and we're not going to do bonds today. I don't really, I think, as we're doing this, I'm like, oh, we can talk about this. We can talk about this. Like I said, we're doing this live. This is the first episode. Rip us apart in the comments so that we become more organized next time. But like, talk to me a little bit about just how, like, we're starting to transition out of the Bitcoin conversation into the stock market conversation. We've looked at S&P briefly, NASDAQ briefly, Russell briefly. We'll go over these charts in more detail. If you're just listening, feel free to take a look at the screen. I promise you're not seeing my face or Austin's face. In fact, I'm trying to figure out how to, there we go. I got rid of our ugly faces too. So now it's literally just a stock chart. So come on over to YouTube so you don't have to see us. You'll hear us. We have risk on looking like it's bidding. We don't have small caps bidding. I'd love to talk through maybe what the reasons for that are and what we're seeing in the charts that could validate these hypotheses.
Yeah, I mean, I haven't looked in too much. Like, again, I think almost it's hard to separate your opinions and your biases from, the charts. So I try not to look too much. I almost compartmentalize them. I'll look at the charts, look at strictly charts, and then I'll go look at the news and see what's going on. Because, again, based on fundamental analysis, like the Bitcoin market's never been stronger fundamentally, never been more development, never had so many people backing it. But I mean, we're down. I don't know how much are we still down from all-time highs, like over 50%, right? Yeah, 56% from the highs, and it's never been stronger. So it's a little bit dangerous trying to do like fundamental analysis, what you think the market should do based on like what versus what it is doing. So why the small caps aren't doing as well? I what do you think on that? It could probably be a better question. I haven't thought too much about it.
So I think I'm going to say something to trigger people right now. I think we overuse the phrase risk on. And I think what is happening is there are things that are considered risk on that are actually looked at as risk off, but fall into the umbrella category because they just are tech. There is a lot of money that thinks Elon Musk is an absolute buffoon and is shorting Tesla. And then there's also a lot of money on the other side of that trade, bet, whatever you want to call it, saying that this is actually smart, safe money. Apple, another example. I think these behemoth companies are literally carrying something like the NASDAQ up. But then if we start to break down the individual stocks in this index, for example, like smallest cap, pull up CCS stock chart.
CCS.
Yes.
So what are we looking at here? Community.
So this looks more similar, this stock chart does, to the Russell 2000s versus the NASDAQs that had an extra leg up. It didn't make a new high, but it got back to that high in February. The NASDAQ did. This is the smallest cap stock in the NASDAQ, though. And my suspicion is genuinely that the NASDAQ, because it's overweighted with the larger tech stocks, those stocks are carrying it up. But then the actual risk on stocks, the actual unprofitable, not yet profitable, however you want to call them, categorize them, that still fall in line with the Russell 2000, those stocks are still beaten up because money does not trust in the long-term viability or even the short-term viability of these companies until some sort of a Fed pivot happens. Just my hypothesis.
Yeah, no, that makes sense too. I think the market might be sniffing that out too. Looking at all these other subsections, looks like the S&P is just a little bit lagged. I mean, these individual stocks, you got NASDAQ is, this one surprised me the most of how good this one looks compared to the S&P. But that's, I think the market's onto something here. I think they're gonna relax on their stance, or at least that's what the charts are telling me.
So pull up the Apple chart real quick, and I just want to really hammer home, take a victory lap, whatever you want to call it, that I was right. And if you look at the Apple chart, it has found that same high from February, which coincides with the NASDAQ finding its high from February. and Apple is the largest weighted stock in the NASDAQ. So I think like this is exactly why it's important to pay attention to indices, but also understand how deceptive they can be and like making you think a certain thing when in fact it's just all it takes is like 6 companies in the NASDAQ to have an up day, and it's going to be a green day for the NASDAQ.
Yeah. I think Meta's been one of the, I remember hearing that it was kind of on a run. I haven't looked at it in a while, but this is a monthly chart. And, even comparing this to Apple, Meta's made Facebook, whatever you want to call it, quite a run. I guess it got beaten up the most too, but I mean, it was all the way down to 80 a share and up to 200.
Yeah.
So,
I mean, like,
and I hate Facebook.
I hate Facebook, but there's a component of this that like I would love to I'd love to talk on, but it makes me kind of disgusted as always. Meta's 2 big pumps. So if you go to the daily chart on this, I can show you when they announced their first. So that gap up was the first time they reported that they were going to cut a bunch of jobs. This second leg up, I believe, like there's a gap right there. Yeah. That gap up, no, to the right, that one. That was the second time they announced job cuts. So there is a very, very tried and true method to increase a company's stock price, and that is through announcing an announcement of layoffs. This is across the board. It's not a Mark Zuckerberg is an evil person thing. This is just like the deplorable nature of the stock market and how it works. And they are genuinely decreasing their costs while maintaining their earnings at the same rate, i.e. number go up. So, and there was a lot of this too. I don't know if you've been paying attention, given the fact that, both of us were victims of the tech stock layoffs, even though technically not tech stock, but I'll allow it. We have it is March 20th, 2023. And we have more layoffs right now at this point of the year than all of 2022. So there's also a degree, I think, within the tech sector that some of the stock prices are artificially inflated right now because of a jubilance around layoffs that Wall Street celebrates while Main Street struggles with. But I digress. I'm off my high horse now.
Yeah, I didn't know that stat. So quarter one was basically as many as laid off as 22 altogether.
Yeah, I'm gonna pull up. There's a website that's tracking this right now. I don't feel shameless in plugging The Hustle, the newsletter. I love it. It's great. Not always excellent, but they've actually been like posting regular updates. Like every time a new tech company announces a layoff, they'll be like, and now the tally is at this number, like this compares to this many months of layoffs between like 2021 and 2022. It's actually bonkers. So yeah, how's that recession treating you, bro?
Yeah, I mean, crazy world, crazy.
Let's dive into. Do you want to go S&P or should we flip the script for the last like 15 onto ETH?
We can go over ETH. I think it's been really interesting. I put a chart up on Twitter, basically a CoinGecko that last week Bitcoin's just been crushing it. It got I said it was a clean sweep of the top 10. Like he was up over 10% almost on every top 10 weighted market cap altcoin. So that was pretty interesting. So let's go over to we can start the whole in the general. This is just the everything besides Bitcoin market cap. So I look at this over dominance usually. So yeah, I mean this one huge V shape. I don't see any problems here with the total market cap of alts. So let's go over ETH. looks very similar. I mean, these are percentages. They're different. Like Bitcoin's outpaced it, but in terms of structure, I mean, it had the same fake out back when the banking news came out, gaps up and then reverses like crazy off the lows, and now we're at new relative highs. I mean, these are highs that we haven't seen really since September or August of 22. So we're quite a long time haven't seen these prices, but I'm just signaling more or less the same thing as Bitcoin, but I hope Bitcoin keeps on outpacing, which would be kind of crazy. But I do think, if I remember correctly, if we go back and that point I was referencing from the last kind of time we were at a bear market and we ran. So we were 2018 complete capitulation. We run from 3K up to 14. Bitcoin actually outpaced all the altcoin shitcoins back here. How do I remember that? Because I used to be a shitcoiner back in 2017, like pretty much everyone else. So I was like, what the hell? Why is Bitcoin ripping? And like these alts are supposed to like outpace Bitcoin, and like they just never did until the actual cycle, closer to actually 2020. And then by then I was fully orange pilled and didn't participate as much as I probably should have, because I don't know if I would have worried about the layoff then.
Yeah. Sometimes I regret not buying Doge on New Year's Eve 2020. It was less than a cent. Like literally my buddy tried to convince me at that moment in time. He was like, yo, like, you don't have a Robinhood account. Like just open a free Robinhood account. Like they'll like deposit $100. They'll match that and just throw it all on Doge. And within a week it was ripping. And I was just like imagining, oh man, I could have fucking had like my surgery. I could have done this with that. That would have been nice.
Yeah, man, it's crazy what those things can run. Even looking at a Doge chart, even recently, I mean, this is in 22. I mean, it goes just straight parabolic. This one's, I never short Doge because of Elon, but there might be some plays here if we can get some. So this is actually risk off still. So like back to the total market cap is, kind of risk on, looking like it's, in a good place, higher highs almost, and big V shapes. That's not what some of these bigger coins look like. So Doge looks nothing like that. Binance, it still looks more flat than anything. Doesn't really have nice structure, but like I know some people are calling for this like alt cycle, and like I said, what I remember from last time from the bear market, Bitcoin just ripped everyone's face off, and it surprised a lot of people that it can outpace these much smaller shit coins for a little bit of time. It's because I don't think that sentiment is going to be back. I don't think it takes a long time for market sentiment to change. I kind of think of that like the Titanic or like a big boat. Like you have to for everyone's collective mindset to shift, it takes a lot longer. Whereas like you can get a 3-month run, a quarter run with good data and just like algos and some money allocated to the Bitcoin, and you can significantly outpace even we saw again last week ETH and the other top 10s, but even over a longer sustained period of this was from April to July of 2019. So yeah, that pretty much really about the same time, that second quarter of 2019 is when Bitcoin had that run that is like a 3x 300%. So in a quarter, something like that, 200-300%. So that's interesting too. So I wouldn't be too excited if anyone's out there listening, trading altcoins and stuff like that. Just be a little cautious. I think Bitcoin can do just as well. And yeah, I haven't been too interested in like trying to make a trade or anything in alts.
What was your shitcoin of choice?
Back in the day?
Back in the day.
Oh, I was an EOS bro.
What is EOS? I'm like happy I don't know what it is, but I'm also curious.
Oh, it was gonna be the Ethereum killer. That was the
They all are. They're all supposed to be the Ethereum killer.
Well, the main thing, and so my reason was okay. They had $4 billion, so that was like the whole thing. They got that war chest, so they had so much money. I'm like, dude, they could just buy anything. They like, if someone had the best developer or whatever, you just go buy them. Like, so that was my whole thesis, is like, okay. And they had whoever did the Steam It, whoever built that. So I forgot who did it, but there was someone who's actually built something before in the space. And then he was like kind of the lead developer of the project. I'm like, so, okay, so there's a product that works somewhat, obviously with no volume, and it didn't, I mean, not much of a use case, but at least like there was a product. And then they have this huge war chest and like all this marketing team. I was like, oh, this one's a lock. And then it went from like $1 to 20. So it was like a 20x. And that wasn't even like, I was in kind of late because like I didn't really dive too much into it. I was really into actual stocks at that time. So I heard about Bitcoin first and before the parabolic pump, but it was probably like 2-3K. So it was somewhat late in that 2017 run, because it went from like, I guess we can look at the chart, but I mean, it went like the last 3-4 months, I think it just went nuts. What was your coin of choice?
I dabbled in ETH for sure. I like my story into how I bought ETH was it was an accident in 2020, and I was gonna buy myself a new pair of Jordans, and I was like, you know what, I'm gonna splurge. I'm gonna get myself like a nice, and I literally had it in my cart, like a $300 pair of shoes. And then right before I entered my credit card information, I'm like, you really about to spend $300 on shoes? Like, let's like go just like there might be something else worth spending $300 on. And I like somehow like stumbled across an ETH rabbit hole, and I kind of dove down it for a while, and it was trading at $200 a coin at the time. And I was like, all right, fuck it. I'll buy a coin and a half. And honestly, like Dylan Leclerc used to make fun of me, but I was like, it's BTC ETH value like has appreciated since the moment I bought it. So whatever, like you could dunk on me all you want. You could say I held for too long. I still made a good amount of money on that. And then I was part of the Safe Moon army that genuinely like I watched Dave Portnoy's like live telecast, and when he announced he was buying Safe Moon, I was like, I'm a millionaire. I'm about to be a millionaire. Let's go. So yeah, that was my shitcoin of choice.
That's good. Yeah, I had so many people ask me about the Safe Moon. I was like, so what does it do? Like, that was like the first question. I was like, okay, so what's going on here? I was like, so you're gonna sell this, right? Like, when you make a lot of money, please sell it. No one ever did.
No.
But I mean, it gets people in the space, so eventually it all goes to Bitcoin, and then people realize everything else is gambling and like should treat it as such. So as long as I always tell people, like, if you're gonna do it, like just do it with like 20% or less of like your overall investment, and like you're not gonna burn yourself, because you still have 80% Bitcoin, and no matter what happens, that 20% goes to zero, you got Bitcoin. So just like whatever you spend, say you're gonna put another $1,000 in or whatever, it's like, okay, put $200 into whatever you want and put 800 into Bitcoin. And I've found that helps a lot more than like just telling people like, hey, don't do this. That just makes them want to do more. And then they also see everyone else getting rich and making money. It's like, all right, well, first of all, it's rich on paper. So like, I know so many people did not sell anything and they were up tens of thousands of dollars. And like for them, that was like a ton of money. I mean, it's a decent amount of money for anyone, but like these people should have definitely been selling it, not knowing even what they're in. Like I said, like, oh yeah, I was like, what does Safe Moon do? Like, just as one example. And he's like, I don't know.
Burn, man. When they burn and you get more time.
Bro, he said the same thing, I swear. He's like, whatever it was, he just kept on saying burn. I was like, they're burning, like, so they're just like getting rid of tokens after you buy it. And he's like, I'm like, dude, that's a
it was dude, it was a 10% fee every time you bought, where like half of it was allocated to just be burnt every single time a transaction happens. And then the other half like gets spread out into the pool of Safe Moon holders. So like your bag continues to get larger the longer you hold, but now it's just like, oh no, we were just stealing your money from you.
Yeah. So But I mean,
That said, I need to interrupt you just to, again, this is only the second time, but this will be the last time as we wrap up the episode, to remind you, do not listen to two bozos on YouTube and base all of your trading decisions on that. You should do your own financial due diligence. You should make a budget to understand your own personal finances, and you should know and understand risk and how much you can afford to take, so you don't have sleepless nights. So you're not sitting there checking the price of Bitcoin or stocks or whatever. All right.
Yeah, no, I treat this, if I ever do any of that kind of trading stuff, it's always like, would I throw this amount of money on like the Super Bowl or something? Don't
Yeah.
do it. Your life savings. It's like, dude, I don't know. Cause I like, I know you talk about sports and stuff too. So I actually, I do quite a bit of sports gambling too. It's just fun.
Too
So you
much.
treat it as such, and then you just allocate whatever. If allocate too much, then it's not fun. So, you know.
So we're about to wind down. I have one more question. I want your take or your expectations on the FOMC meeting this week, because whether or not we like it, the market is going to react accordingly to whatever decision comes out. 50, 25, 0 basis point hike. What is your expectation? Give me a percentage for each. And if it adds up to more than 100, I'm going to start to doubt and question your math abilities.
So my opinion on this is going to be what the markets just showed me. So I haven't, even looked into it. I've tried to stay away from, you know, uh, trying to anticipate that, because I think that people get caught up in it. But based on what the charts are saying, it looks like it's pretty good probability that I would say there's not going to be a more hawkish stance. They might come up with a hawkish tone afterwards and say a lot, but I don't think they're going to surprise anyone to the upside. So whatever the market is pricing in, I don't know if they would surprise to the downside either. So what is the highest probability that they're going to do? What's the likely uh, pace right now? What are they supposed to do? Like 25 or 50? Which one?
50 is at 0%.
Okay.
So if you're just going to take the market bet, I'm trying to pull it up right now on, I think it's the St. Louis Fed. Let's see, rate hike. I want to say it still favors. Okay. Nope, that's the wrong Fed. Okay. It says like slightly more than 50% for 25% rate hike. It's like not really budging on that. I am probably more in a like 75 to 80%. It's going to be 25. I would even go so far as to say like 90%. Based on my portfolio allocations, I would actually say it's probably 90% that we're going to get at least 25. I actually have a 5% shot at a 50 just to like jolt the market a little bit, and then 5% at 0, because I think the fear that it would stoke for a pause at this moment in time would be far too drastic, and then the Fed would have to come out and do way too much cleanup. It is really telling though, and to your point, I think like I personally I hate the like rate hike predictor, simply because like when you saw Powell talk to Congress a week ago yesterday, or tomorrow will be 2 weeks from Powell talking to Congress, and as he was talking and shortly after, they literally, the like predictor thing was like, oh, it's a 50-point rate hike, like 50% of that, 30% at a 25, and then the final 20 was a pause. And then Silicon Valley Bank like flipped the whole script, and then it was like over favoring a 0, and then it started to like settle at this like it's coin flip of 25 to 0. I think this like that moves far too quickly based on emotions more than anything, and I don't, do you like him or not, I actually think the one thing Powell does right is like he doesn't let his emotions dictate things. He let the market make a lot of decisions for him though, but other than that, like I don't think he gets swayed too quickly by like an emotional plea.
Yeah, the liquidity lines and stuff coming out last night was, I guess, pretty interesting. If they're having that much liquidity issues to the hike even 25 is kind of interesting. So I mean, we'll see. I guess it's more of a toss up than, I mean, this is probably one of the lower percentage points. Like usually they're pretty high, and like the market knows exactly what they're going to do, and the Fed wants that. They don't like indecision. So I wonder if they've had some hard talks behind closed doors. Like, should we do the pause now or not? We'll see. I'm kind of with you. I think the 25 is. I don't think they want to pause yet, but yeah, I guess that's why we wait and watch. But the markets are saying, there's a shot for them to pause, like a legitimate shot. It looks like.
I think the market might actually be wrong for a change on this one. They've been right, very consistent. Like it was like eerie how consistent they were right, but that's not always the case historically speaking. Like they were wrong consistently in 2019. They were wrong consistently in 2017. So there's more than a chance that the market gets it wrong, and
they were really wrong. They were trying to predict that the Fed would pause or reverse course back in the fall or something like that. So the euro dollar flipped negative, and that was signaling that the market was pricing in either cuts or pauses way too early, like last fall, and we're already through winter and now we're into spring. So like they're off by 2 quarters.
I think that is going to do it for our first episode of Weekly Chart Analysis. We are at the hour. It is Persian New Year, so I'm going to go spend it with my family. To any Iranians watching, Eid Shalom Mubarak, Nowruz Piruz. Austin, my brother, I will leave it to you for the final word.
Yeah, I guess we'll see what happens this Wednesday. It's been fun, and we'll see you guys next week.